In June 2022, one of crypto's most powerful hedge funds missed a margin call. Within days, $10 billion had evaporated. The two founders fled. Nobody knew where they were. This is how Three Arrows Capital collapsed the entire crypto market in 2 weeks. Three Arrows Capital. 3AC. For years, they were crypto royalty. Billions in assets. Every major exchange trusted them. They funded startups. They moved markets. Then they vanished. Overnight. No warning. Just gone. And when they fell, they took half the industry with them. 2012, Su Zhu and Kyle Davies started Three Arrows Capital in Singapore. Two childhood friends from Andover Prep School. Both went to Columbia. Both worked at Credit Suisse. They quit to bet on crypto. When Bitcoin was $50. Everyone thought they were insane. Crypto was for libertarians and drug dealers. Not serious investors. But Sue and Kyle saw something others didn't. Institutions would eventually want exposure. And they'd need professional managers to get it. They started small. Trading Bitcoin and Ethereum. Making leveraged bets on price movements. Building relationships with every major exchange. By 2017, Bitcoin hit 20,000. 3AC's early positions made them rich. Really rich. They expanded. Funded blockchain startups. Invested in DeFi protocols. Became venture capitalists. Built a crypto empire. Their strategy: borrow as much as possible. Use leverage to amplify returns. In a bull market, leverage is free money. And crypto was the ultimate bull market. 2020 to 2021. Bitcoin went from 4,000 to 69,000. Ethereum went from 100 to 4,000. 3AC's returns were insane. 50%. 100%. Some quarters, 200%. Every crypto lender wanted their business. BlockFi. Celsius. Voyager. Genesis. Deribit. The pitch was simple: loan us money, we'll pay you back with interest. No questions asked. And 3AC always paid. On time. Every time. They were the model borrower. Su Zhu became crypto's philosopher king. He tweeted constantly. Market predictions. Investment theses. Memes. His most famous call, the supercycle thesis. Crypto wasn't cyclical anymore. It was going up forever. Anyone who didn't see it was poor and stupid. He called Bitcoin skeptics no-coiners. He mocked Warren Buffett. He said Ethereum would flip Bitcoin. He bought a yacht and named it Much Wow after the Dogecoin meme. And people worshipped him. Because he was right. Because crypto kept going up. Because 3AC kept winning. At their peak in early 2022, Three Arrows Capital managed over $10 billion. They were untouchable. Invincible. Too big to fail. But behind the scenes, 3AC was a house of cards. They'd borrowed over $3 billion. From everyone. BlockFi, $660 million. Voyager, $650 million. Genesis, $2.4 billion. Celsius, $75 million. Deribit, $80 million. Unsecured loans. No collateral. Just handshake deals. Why did lenders trust them? Because 3AC had a reputation. Because they always paid on time. Because saying no meant losing their business. In crypto, reputation was collateral. And 3AC's reputation was gold. Their biggest bet, the Grayscale Bitcoin Trust trade. GBTC. GBTC was a closed-end fund. You give them Bitcoin, they give you shares. Those shares trade on the stock market. For years, GBTC traded at a premium. You could buy Bitcoin for $50,000, convert it to GBTC shares, and sell them for $55,000. Risk-free profit. Institutions called it the GBTC ARB. 3AC went all in. They borrowed billions, bought Bitcoin, converted it to GBTC, and waited 6 months for the lockup to end. Then they'd sell. Pocket the premium. Pay back the loan. Repeat. It worked perfectly. For years. 3AC made hundreds of millions on the trade. But in February 2021, something changed. The premium disappeared. GBTC started trading at a discount. Suddenly, 3AC's billions in GBTC were underwater. They couldn't sell without losing money. But they couldn't hold forever, the loans had interest. And margin requirements. Su Zhu tweeted that GBTC was temporarily mispriced. That the discount would close. That it was a buying opportunity. It wasn't. The second catastrophic bet, Terra and Luna. Terra was an algorithmic stablecoin. 1 Terra was supposed to equal $1. Not backed by real dollars. Backed by code. And another token called Luna. The mechanism was insane. If Terra dropped below $1, you could burn it and mint Luna. If it went above $1, you could burn Luna and mint Terra. Arbitrage would keep the peg. In theory. 3AC believed in Terra. They bought hundreds of millions in Luna. They loaned it to other funds. They used it as collateral for more borrowing. Su Zhu called Luna the future of money. He invested in the Terra ecosystem. He promoted it on Twitter. He was all in. By late 2021, 3AC's balance sheet was a ticking time bomb, billions in borrowed money, invested in underwater GBTC and speculative Luna. But they kept borrowing. Kept leveraging. Kept pretending everything was fine. Lenders asked for updated financials. 3AC stalled. Sent out dated reports. Avoided questions. Because the truth was, they were already insolvent. They just hadn't admitted it yet. May 7, 2022. Terra lost its peg. 1 Terra dropped to 98 cents. Then 95. Then 90. Panic selling. The death spiral began. Luna's price collapsed to absorb the selling. From $120 to 80. Then 60. Then 40. Within 48 hours, both tokens were in free fall. May 12, Terra hit 10 cents. Luna hit $1. The algorithm had failed. $60 billion evaporated in a week. 3AC's Luna position, worthless. Hundreds of millions. Gone. But worse, they'd used Luna as collateral. Borrowed against it. When Luna crashed, their collateral vanished. Margin calls came immediately. Deribit, post 80 million in Bitcoin or we liquidate your positions. Genesis, you're under-collateralized. We need 500 million. Now. BlockFi, your account is in default. Pay up or we seize your assets. 3AC had no cash. Their GBTC was locked. Their Luna was worthless. They couldn't pay. So they went silent. Stopped answering calls. Stopped replying to emails. Vanished. June 13th. A pseudonymous trader called Fatman tweeted, "I'm seeing 3AC liquidations on chain. Billions being sold. This is bad." Crypto Twitter went into overdrive. Wallet addresses were traced. On-chain data exposed everything. 3AC's Bitcoin. Ethereum. Stake tokens. All being liquidated. Publicly. In real time. The forced selling pushed prices down further. Bitcoin dropped below 20,000. Ethereum below 1,000. The market was in free fall. June 14th, lenders panicked. BlockFi CEO, Zach Prince, tweeted, "We have significant exposure to a large counterparty. We're working through it. Everyone knew he meant 3AC. Celsius, another lender, froze all withdrawals. Extreme market conditions. Translation, they'd loaned too much to 3AC and didn't have the cash to cover redemptions. Voyager Digital sent an email to customers, we may experience losses from a counterparty default. The entire crypto lending market was collapsing. Because everyone had trusted 3AC. And 3AC was dead. June 15, creditors filed for liquidation in the British Virgin Islands. 3AC was officially insolvent. Estimated liabilities, over $3.5 billion. Assets recovered, less than $1 billion. The shortfall, at least $2.5 billion. Money that would never come back. And Su Zhu and Kyle Davies? Nobody could find them. Calls went to voicemail. Emails bounced. They'd vanished. The contagion spread like wildfire. June 17, 2022. Voyager Digital halted withdrawals. $5 billion in assets. Frozen. July 1, Voyager filed for bankruptcy. The filing revealed the damage. They'd loaned $650 million to 3AC unsecured. They'd never see it again. 600,000 customers woke up with locked accounts. Life savings. Retirement funds. College tuition. Gone. July 13, Celsius Network filed for bankruptcy. They'd loaned $75 million to 3AC. But the real damage was the panic. Customers tried to withdraw everything. Celsius didn't have the cash. They froze withdrawals. Then collapsed. 1.7 million customers. $25 billion in liabilities. The biggest crypto bankruptcy in history. Until FTX. November 2022. BlockFi filed for bankruptcy. They'd survived the initial shock with an emergency loan from FTX. But when FTX itself collapsed, BlockFi went down too. They'd loaned 3AC over $600 million. Never got it back. Genesis Trading, the institutional arm of Digital Currency Group, lost $2.4 billion. They didn't file for bankruptcy immediately. Their parent company bailed them out. But the damage was done. A year later, Genesis would file too. The total carnage, over $10 billion in locked customer funds. Millions of people couldn't access their money. Some lost everything. And where were Su Zhu and Kyle Davies? July 2022. Kyle gave an interview to Bloomberg. From an undisclosed location. Sitting in shadows. Refusing to show his face. His message, we're the real victims here. Lenders panicked. They didn't give us time to recover. The market turned against us. No apology. No responsibility. Just excuses. He claimed they'd been rug-pulled by Luna. That they couldn't have predicted the collapse. That everyone else was to blame. The interview pressed him, you borrowed billions. You lost it. Why should anyone trust you? Kyle's answer, we were good actors in a bad situation. August 2022. Court documents revealed the truth. 3AC had been insolvent since March. 2 months before Luna collapsed. They'd hidden it from lenders. Sent fake balance sheets. Avoided audits. They'd used new loans to pay off old ones. Classic Ponzi behavior. They transferred millions in personal assets out of the fund. Before the collapse. While telling lenders everything was fine. September 2022. Singapore police issued arrest warrants. Charges, fraud, forgery, failure to cooperate with liquidators. Su and Kyle ignored them. They'd already left Singapore. Nobody knew where. Liquidators started tracing assets. What they found was infuriating. Luxury apartments in Singapore. A yacht in Dubai. Rare NFTs, Bored Apes. Crypto punks. Bought with borrowed money. Su Zhu's wife had a Hermes bag collection worth over $100,000. Liquidators seized it. But most of the money was just gone. Spent. Lost in bad trades. Evaporated with Luna. Creditors filed claims for $3.5 billion. The liquidators recovered $1 billion. Maybe. Retail investors got nothing. The companies that loaned to 3AC went bankrupt. And the bankruptcy estate divided up the scraps. Three Arrows Capital destroyed $10 billion in wealth. Not through crime, originally. Through arrogance. They believed they were smarter than the market. That leverage was safe in a bull market. That risk didn't apply to them. They were wrong. The collapse exposed crypto's dirty secret: the whole industry ran on trust. Unsecured loans. Fake collateral. No regulation. Just handshake deals and reputations. When 3AC fell, the dominoes fell with them. Voyager? Celsius? Block FI? Genesis? Billions in customer funds locked. Gone. And the founders? They walked away. No jail time. No consequences. Just Twitter feuds and podcast interviews from undisclosed locations. In 2024, Su Zhu and Kyle Davies launched a new crypto fund. New investors. New promises. Because in crypto, failure doesn't disqualify you. It makes you experienced. 3 Arrows Capital proved a harsh lesson: in unregulated markets, trust is a weapon. And when the music stops, retail investors always lose. If you want to see how another crypto empire collapsed in days, watch the Celsius video next. Same contagion. Same lies. Different victims.